Fantom continues to see a significant bounce to the upside in a move that is now holding above the 20-day MA here on the 1-hour chart. And on today's video, I will be discussing the significant key areas of support and resistances that we need to break above in the next coming hours, basing my analysis on the Elliot structures, and also discuss my long-term price prediction analysis. And before I dive deep into the analysis, make sure that you check out BINANCE, which is giving you up to 5,000 USDT in rewards, where you can get up to that USDT in sign-up bonuses, and I will be leaving a link down in the description box. And getting back to the charts, you can see that after seeing our massive breakdown move, in a move that gave us a significant low below the 0.2578, Fantom has continued to see a very nice bounce to the upside in a move that is obeying the Elliot structures, where I'm terming these as a first wave to the upside. And after we picked in this Elliot wave count 1, whatever we expected next was a corrective structure in an Elliot wave count 2. And once we have a low in place in this Elliot wave count 2, I'm expecting to see another bounce to the upside in an Elliot wave count 3, then expect an Elliot wave count 4, and then an Elliot wave count 5. And to just show you that the second wave over here could have now seen its low, I will be using the Fibonacci's, connecting the fibs from the low of the first wave to the high of that Elliot wave count 1, giving me a minimum pullback target area for the second wave between the fib level 0.5 and the fib level 0.618, which perfectly lies between the 0.294 and the 0.285, which is an area that we almost fully maximized. And you can see that we saw a wick into that target area. And after a week into the area, we have started to see a bit of a bounce to the upside in what could be the start of an impulsive Elliot wave count 3, whose minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that Elliot wave count 1, then dragging the fibs to the low of the second wave, giving me a minimum target area for the third wave at the fib level 1.618, which perfectly lies above the 0.4081. And once you have a high in this Elliot wave count 3, expect a pullback in an Elliot wave count 4, then continue gearing up even higher in an Elliot wave count 5. And those are the target areas that I have in case we see a break above the significant high that we made in this Elliot wave count 1 above the 0.3311, because that will be enough confirmation that we have now bottomed out in this Elliot wave count 2, and that impulsive move to the upside in that Elliot wave count 3 has now started. But in case we don't see a break above that significant high in this Elliot wave count 1, there are chances that we can still see one more new low in this Elliot wave count 2, and that will also increase the likelihood that whatever we are seeing at the moment is an ABC corrective structure, having this as a wave A, then a bounce in an Elliot wave in a wave B, then we can expect one more new low in this wave C into this target area to fully maximize the area and give us one more new low before we can bounce back to the upside in an Elliot wave count 3. That is another scenario that we need to have in mind in case we don't see a break above the significant high above the 0.3313. And jumping to the daily chart to now give you my long-term price prediction analysis and what I'm expecting to play out once the bull market is here. On the daily chart, you can see that after getting our bear market lows last year, we saw an aggressive bounce to the upside in a move that gave us a high above the 1.2446 in what I'm terming as an Elliot wave count 1. And after we picked in this Elliot wave count 1, we started a bit of a pullback in an Elliot wave count 2, whose minimum target areas I have highlighted here on the charts using this blue target area. And this is an area that we have now fully maximized. And that area, I came up with it by connecting the fibs from the bear market lows to that high in that Elliot wave count 1. And you can see the area perfectly lies between the fib level 0.5 and the fib level 0.78, which is an area that we fully maximized. And last week when we saw that massive breakdown move, we saw a breakdown move to the fib level 0.88, which perfectly lies above the 0.3091, which is the last line of support here on the Fibonacci's. And a total loss of this area on the Fibonacci's means that there are high chances that we can easily see a breakdown move, giving us a total reset of the bear market lows that we made last year in October. So we need to continue paying attention to that significant area. We need to continue holding above it for me to expect a bounce in the next coming months or maybe weeks in this Deriv count 3. So that is the price action that I'm expecting here on the Fantom chart for the next coming hours and also days. And that's all for this video, and I hope to catch you on the next one.